There are opportunities everywhere, bursting with potential if you're ready to act. European markets have gaps you can fill. Top talent in Tokyo is waiting for an employer like you to deploy them. Innovative solutions exist in Dubai that will give you the competitive edge. The key to all these opportunities is speed. Speed to action and speed to execution so you can achieve speed to market. Hiring, onboarding, paying, insuring, remaining compliant. We take care of all of that. In any market and any industry, anywhere in the world. Not in months or years, right now. Globalization Partners. Succeed faster.
Hi, everyone. Thanks for tuning in to Tech in Asia Pitch Night. I will be your host this evening. My name is Ting, and I'm an events producer here at Tech in Asia. So this time for our virtual pitch night, we are partnering with our friends at Globalization Partners. Globalization Partners is redefining the way companies do business globally. So if you're one of the startups that's ready to grow your business globally, Globalization Partners can help you move very rapidly. So this is the fourth time that we're actually hosting a virtual pitch night. And I think we're well into the Zoom era. So I'm actually really looking forward to see how our contestants hold up pitching virtually. So Globalization Partners will be offering our winners cash prizes that will go on to helping them grow their business. The runner-up of today's session will be getting 2,500 USD. And the grand winner will be getting 5,000 USD, including a featured article on techinasia.com. So we have 6 startups here with us today from all over Southeast Asia, very exciting. And each presenter will have 5 minutes in total to pitch. And to keep time, we will ring the bell once at the 4-minute mark, and also 2 times at the 5-minute mark, like this. Yeah. Okay, so after they've given 5 minutes to pitch, we will follow up with a 5-minute Q&A from our judges. So speaking of judges, let's introduce them now. Please welcome Charles Ferguson, General Manager of APAC Globalization Partners.
Hi there.
Hi. And Su-Trin Tan, Senior Vice President of Group Channels and Digitalization at UOB. Hello, thanks for joining. Brandon Chu, Vice President of International Marketing at EDB. And of course, Huiyan Leong, Executive Director at Vertex Ventures. Welcome, judges. Thank you for being here.
Thank you so much.
Yeah. Very excited for this evening. And before we begin to all the pitches, and I know all the startups are on this call listening in very eagerly, I just want to maybe help them succeed. And do you have any parting advice for them before they begin? Maybe Charles, you can summarize it for us.
Absolutely. Look, it's super exciting. I'm extremely confident that we're going to hear some fantastic ideas during the course of this conversation. I think, Reid Hoffman, who's the co-founder of LinkedIn, had a great quote that it's more important to have the right person say yes than to have everyone say yes. So I think this is a great opportunity for the folks who are pitching this afternoon to kind of hone their story, really demonstrate the idea of the right sort of product market fit, which is a little bit cliche, but it's the right advice. From my point of view and from what we look at from a Globalization Partners point of view, it's really about, one team and one dream and really focusing on your passion. I think if those things come through, you're going to do exceptionally well, whether it's in this sort of event or in future events as you go out to raise funds. So can't wait to hear the stories, can't wait to hear the angle and really encourage you guys. And look, you've gotten this far, so high five from me.
That's great. Couldn't have said it better. I hope you guys were taking notes along the way. So that's exactly what Charles is looking for. Let's get to it. Taking the stage first is Abhishek Agrawal of Oh, sorry. Before we jump into the pitches, to everyone that's listening today, we want to know who is your crowd favorite. So
Cool.
yes, exactly. So please vote for the pitch of the day on a poll function, which you should see. And our polls will close after the last pitch, but of course you can vote anytime starting from now. And although the poll might not be, you know, the final answer, we don't really know that, but at least we'll know who's the favorite, and that will definitely go into the judges' considerations. Yes. Okay. Sorry, Abhishek, to scare you like this. You're nervous enough. But yes, from KinAccess, you are based in Singapore. KinAccess enables personalized health for fitness seekers and athletes and evidence-based recovery for musculoskeletal patients. Great, now that gyms are all open again, I'm very curious to hear what you have.
Yeah, hi, I'm Abhishek from KinAccess. KinAccess is a data-driven health platform and wearables company enabling and empowering people for mobility and a better life. We are focusing on musculoskeletal disorders and injuries, which are a global health phenomena with 25% of the global population living with a MSK condition. Personally, I have seen my own father living with a spinal problem for the last 25 years of my life, and I was motivated to build something that adds value to the life of people using my product. Currently, we are looking to serve chronic knee osteoarthritis or OA patients as our beachhead with 263 million knee OA patients worldwide. Our phase 1 markets are Singapore and Australia with an aging population and a high prevalence rate, and phase 2 market is North America. Chronic OA patient can be best managed by early interventions, but patients decide to go for interventions too late. 83% of OA patients delay surgeries for more than 2 years. This puts them at a higher risk of complications and disabilities. It results in a direct loss of potential income for providers such as orthopedic surgeons, and it costs payers high per patient for both surgeries and recovery. How do we help? We help providers such as GPs, physiotherapists, and orthopedic surgeons to manage OA better and achieve optimal outcomes. We do this by enabling data-driven decision-making that's patient-centric. Our data platform actually helps patients learn and visualize their knee condition and compare it with fully recovered or healthy patients and choose the right treatment for reducing their pain, improving their function, and improving their mobility. We are introducing Kemia, which is the world's first continuous knee monitoring product for OA patients, helping them visualize their knee health condition and enabling the right choice for their treatments. This is an award-winning product based on validated proprietary technology, having won the James Dyson National Award in Singapore last year, built upon a strong portfolio of more than 20 patents, which has been validated for clinical use. We enable surgeons to drive up the patient's decision-making towards surgery. Currently, surgeons are only able to convert 1 out of 10 patients who need surgery. With KinAccess Kemia and KinAccess Clinical Workflow, they are now able to convert 3 times more patients for surgery, which helps them increase their revenues as well as help the patient achieve better outcomes. We have already been deployed in primary care, physiotherapy, and specialist clinics in commercial pilots across the island and have booked initial revenues. We are also collaborating with some of the leading orthopedic surgeons at major public hospitals, doing 6 clinical projects with 3 different public hospitals, and will be generating data from more than 800 subjects over the next 12 months. We have commenced the sales of Kemia in Singapore with HSA regulatory clearance, and further approvals are in process in target markets of Australia and US. We are uniquely positioned as a mass market continuum of care product, whereas most of our competitors are either focusing on an episode of care or are niche market products. Our product is prescribed to patients on a 1 or 2 week rentals by clinics to whom we rent our product at $49 to $99 per product per month, and $20 per month is charged for servicing and $10 per month for consumables. This is a B2B2C model. We are currently raising $1 million to support manpower, production and inventory, and sales and marketing, and hit $1 million in annual recurring revenues in the upcoming financial year. We are projecting $1.2 million in revenues with an 80% gross margin, followed by a 3 to 5x year-on-year growth for the next 5 years. Currently, we are 11 full-time people, all young, energetic, cross-functional team, and a panel of domain experts with expertise across commercialization, financial management, and technology research and development. We are also supported by top surgeons and physical therapists in the industry who are helping in both product development and commercialization activities. Thank you for listening to me. I'm Abhishek from Kinexus.
Thank you very much, Abhishek. Now, after that presentation, judges, do you have any questions for him?
I'll see if my colleagues have anything for him, but I do have a quick question. Any of my folks want to say anything? Cool, I'll ask. I'm very curious about your competitive environment, Abhishek. I'm wondering, with the advances that companies like Apple are making with respect to their health applications within the smartwatch, and similarly to Google through the Android platform, if you see maybe opportunities to either collaborate, or maybe there's some competitive environment with respect to those types of companies getting into this space.
Great question. So the major difference, I would say, between us and these large, companies getting into the space of health monitoring is the fact that they are not joint-specific wearable devices, and they can't collect the kind of data set which is clinically relevant that we can collect. Our data set is unique, proprietary, and differentiated. We are the only device in the market being able to collect C-ROM data, that's continuous range of motion data of the knee joint. None of these wearable devices will ever have the capability, simply because, first of all, they're not designed to be used locally at the site of the joint where the disease has occurred, right? Which is the knee joint in this case. So they are unable to collect that form of data, which is where we are uniquely placed.
Excellent. Thank you very much.
Hi, I have a question.
I have a question. Oh, sorry. Do you want to go first?
Go ahead.
Yeah, okay. Actually, my question is around the algorithm of KIMA, right? So you mentioned that you actually developed that algorithm behind KIMA. I would just like to understand, how is this algorithm, is it in-house developed, and how do you ensure that it continuously is accepted and recognized, right, by major players in the market as the time progresses and as you collect more and more, as you collect information, right? How is this algorithm going to be refined to ensure scalability?
Great question. So all of our proprietary technologies, including algorithm, is fully developed in-house. And recently we have obtained a patent which has been granted for this algorithm that we have developed. And how are we going to be ensuring that this algorithm remains the best in class? All these clinical projects that we are doing and the data that we are collecting is basically going through this algorithm, which is continuously being improved as more and more data flows into our platform. So the more data that we collect, the more people that use our product, the more we learn and the more we improve this algorithm, right? And that's how we ensure that we remain at the top of the class in this segment.
Hi, maybe I'll quickly chime in here with a question. So maybe two parts to the question. Is your device the primary channel from which you collect data for analysis? And if that's the case, or whether that's the case or not, what is your go-to-market strategy to ensure that as many people who are your target profile patients have access to the device or encouraged to use the device?
Great question. So device is one of the channels through which we are collecting data. The wearable device is one of the channels. We also plug in other forms of data set that clinics already have that we are working with. How do we ensure that we get the maximum amount of coverage with respect to data collection? So we start at a very, very early stage. We start at a primary care level, general practitioner clinics, right? GP clinics, as we call them. So that's where we start collecting data, and we go all the way from GP to physio to ortho to hospital to post-op chronic, post-op acute care, and at patient's home. So we have this big spectrum of data collection, that activity that is going on, and our wearable forms a segment of it, but then we have data across the segment. And that's how we ensure that, you know, wearable is definitely an important source of data, but then we have expanded the sources of data from which we are getting our data and feeding our data platform.
Great, thank you for answering all those questions. I think that's all the time we have for this session. Judges, I hope you got all the information that you need. Thank you so much, Abhishek. We will call you back later.
Thank you very much.
Now, moving on to our second startup, please welcome Satria Sukri of Tuju Media, who's based in Indonesia. They are a result-driven media localization provider company. Welcome, Satria.
Hi, thank you.
Hi.
Okay, I just start.
Share your screen.
Okay. Thank you to all of the judges and Tech in Asia for giving us a chance to have a pitch with you. My name is Satria. I'm the CEO of Tuju Media. My company, Tuju Media, is developing a cloud-based system to help film production, OTT, and TV station be spared from film piracy by utilizing our platform named TMS, and we are looking to raise $2.8 million US. Okay, the problem in the case film piracy has always been our issue. TV shows and movies are the most pirated item on the web, making up more than 64% globally. In fact, pirated video gets over 230 billion views a year, or as much as 24% global bandwidth usage. Second, by 2022, online TV and movie will lose $51 billion US due to piracy. And third, the language gap. 75% of the market do not use English or understand English at all. And with more than 1 billion OTT users currently, the market needs localized content more than ever. These are global issues that requires global responses. So we make TMS or Tuju management system. First, with TMS, content deliveries are safely delivered and can be worked securely due to our cloud-based system. Secondly, visibility. With the fully cloud-based system, client can also manage project, upload, download, and review their budget. And third, we also implement AI to our technology with speech-to-text and text translation to speed up supply chain process and help our global partners work efficiently. So content creators can deliver film on time globally. Okay. Global OTT market is still growing rapidly fast with a CAGR more than 14%. By 2026, we will acquire 3% of $3.3 billion US of an APAC subtitle and dubbing industry market, or as much as $112 million US by serving the giants. So how easy is the process and transparent is? First, our client just need to log into TMS client dashboard and upload the film. Client can see the price upfront, so no hidden cost. Secondly, our team will manage the timeline for the project. And third, client can easily download the film project from the dashboard. With this solution, we are able to greatly reduce film piracy. For the business model, we charge the client based on minutes of the film duration. And then for our expansion plan, Tuju will have partner and client across ASEAN countries by 2023. And then for the competition, we are the only one that give cloud-based system solution and software as a service program for our partners at an affordable price. Yeah, Tuju already makes profit. Within a year, Tuju has already acquired 0.4% of the APAC market, and we already have satisfied client within a retention rate of 80%. Okay, for our team, has worked in the most successful company and startup, and we have successfully launched our startup and profit from day one, and maintain growth as we expected. As a growing startup, Tuju is calling for investment. Together with your help, Tuju will rapidly expand our services through the APAC market and to become the leader of the industry. Okay, I'm Satria, I'm the CEO of Tuju. We are looking forward for your input and question. Thank you.
Thank you very much, Satria. Now, any one of the judges would like to get the ball rolling?
I'm gonna do it again.
Yes, Charles.
Satria, thank you so much. That was a great pitch. I wanted to ask you, what was the the passion play here? Where did this idea come from? You clearly have some really interesting insight into the industry. Tell us a little bit about why this part of the industry. What is this coming from?
Yes, before we launched Tuju, I am a photographer for the advertising company. We do protect copyrights there, and also my major is designer. So I know that we always protect the copyrights for the films and then for the art and so on. So
Yes.
that's why with my background of the in technology, I have an idea to protect first for Indonesian film market. But within a year, our company growing rapidly fast. It's actually very good. Now we are currently localized for 23 languages.
Outstanding. Thank you so much. I see Roy is on your advisory board too. Yeah. He's a fantastic person to help give you some insight. So congratulations on that.
Yeah, Mr. Roy is help us a lot.
Yeah, he's a good dude.
Hey, Satria, thanks so much for the presentation. If I just had one question, you said you already have 0.4% market share in your region. Could you talk a little bit about the competitive dynamics? Like, is competition concentrated in a couple of vendors, or is it many small vendors?
Yes, for the APAC market, actually we are the second tech-based localization. One is from Singapore, one that have already a multi-billion US dollar company, and then second is us. So for the APAC market is still very huge market. In fact, the largest market film industry in the world, and then that give us a lot of headroom to grow. Yeah, and then because of the COVID, and then the OTT market is still growing rapidly fast now. Everyone watching in their home. So yeah, we got a lot of client from there, the OTT market in Asia.
It's very interesting. Huyen or Suchun, do you guys have anything to add?
I have a question on the typical client profile. So would it be typically the responsibility of the OTT platform players to translate and localized to the markets, or is the production companies? And is that landscape fragmented, or will you end up having a client concentration issue?
Yes, usually OTT, usually the localization process is on us, the company like us, not at the OTT or the production side, because they already have something to do, and then they need something very fast to deliver, to be because they have deadline, right? They buy a lot of film. They need someone to localize and distribute. So yeah, they use us for that.
Okay, thank you.
All right, thank you very much. We have time for one small little question if anyone has any.
Dr. Me again, Brandon from EDB. If you could just talk a bit about pricing strategy. How does your pricing compare to some of your competitors in the market?
Yes, because we are very new, and our mission is to help local production house through Asia. That's why our pricing strategy is it's more affordable compared to our current market leader here. Yeah.
All right, great. And I can also see on the chat, you have Jet Inovasi, who's supporting you from Indonesia. So yeah, don't forget to use the polls and vote. Thank you so much, Satya, and the team at Tuju Media.
Thank you.
Now let's welcome the next startup. We have Angtura of Ziwaka. They are based in Myanmar, and Ziwaka is an electronic medical platform to bridge the gap between patients and healthcare providers. It's amazing. Welcome.
Okay, thank you. Hi, I'm Dr. Angtura, and my company Ziwaka is a unified digital platform that enables clinics in developing countries to provide affordable, high-quality healthcare. We do this through a connected ecosystem of healthcare resources on top of a practice management SaaS. We are currently operating in Myanmar and are looking to expand to 2 other similar markets. This is my co-founder, Dr. Kain. She used to own a small clinic in the outskirts of Yangon, where she saw 30 patients per day. Although she loved helping her patients, she felt she could do so much more. Every week, she lost about 24 hours with searching for paper records, updating drug inventories, and doing the finances. Many of her patients needed specialist care, which they could not afford. As she could not solve the case by herself, she had to call her seniors for every 5th patient. At the end of the month, her net income was just $600 US. Compare this to the $14,000 US of a GP in the US. There are so many GPs like Kain who are overwhelmed in developing countries. That's why Dr. Kain decided to give up her clinical life and help doctors who are in a similar situation. Together, we founded Ziwaka to amplify the capacity of doctors. We do this by allowing doctors to manage their clinics more efficiently. This reduces time wastage by 80%. We do this by connecting doctors to an ecosystem with other doctors and pharma companies. This allows GPs to provide high-quality healthcare. And we do this by giving doctors a better bottom line. Doctors can save costs when reordering drugs through Ziwaka and receive additional benefits from sponsorships or anonymized data sharing for research purposes. We believe that small to medium frontline clinics are the key to dramatically increase healthcare quality in the developing world. Ziwaka is an electronic health records and practice management SaaS that runs on any infrastructure. So clinics don't need to buy an expensive hardware and can start to run immediately. EHR that looks like EHR doesn't really work in the developing world. Doctors are often frustrated with overcomplicated solutions. With Ziwaka EHR, adding a medical record is as easy as posting on Facebook. But we go beyond software as a service. With Ziwaka Shared Care, doctors become part of a community where they can solve medical cases together. With Ziwaka Pharma Engage, doctors get access to updated drug information and they can communicate directly with medical reps or order drugs. We run a freemium SaaS model. The free tier gives clinics access to Pharma Engage and Shared Care. Clinics can then upgrade to paid subscription to use practice management and EHR. And we have two types of clients. One is clinics themselves who are looking to increase their productivity, and two is pharma companies or NGOs that would like to sponsor doctors. Our business model is so great because there is such a high retention rate. Imagine a doctor who writes 1,000 medical records a month. They don't easily switch to another solution anymore. In addition, we have a big monetization opportunity with pharma companies. Pharma companies are very willing to pay for access to doctors. We have tested our business model in Myanmar and talked to stakeholders in other developing countries. Our business model is replicable in similar markets. Practice management solutions for developing countries form a $600 million market. Monetizing access to doctors for pharma companies is another $1 billion market. And we are currently setting up a company in Singapore and will expand to Thailand and Vietnam over the next 18 months. The market size of Southeast Asia overall is $100 million. Currently, we have 200 doctors using our free tier and 10 paid subscriptions in Myanmar. Since September last year, we have been generating $15,000 to $30,000 in monthly sales with 60 pharma brands for continuous medical education and advertising. When asking our pharma clients if they would be interested to sponsor subscriptions for doctors, 8 out of 10 said they would immediately buy a minimum of 50 annual subscriptions to support doctors. My co-founder and I bring complementary skills to Zivoca. I have experience in running businesses for 10 years and good technical skills, and my co-founder, Dr. Kain, brings the medical knowledge and experience in health IT systems. We have a team of 4 developers, 2 account managers, and 1 admin. We are raising a seed round of $300,000 to finance the next 18 months, where we want to acquire 5,000 free tier users, 1,000 paid subscriptions, and 200 pharma brands in 3 markets. We are currently in discussions with a multinational pharma distributor for a ticket in this seed round. Be part of our exciting journey to change how healthcare is delivered in the developing world. Thank you.
Great job. Thank you very much, Ang. Now, Charles.
Dr. Tura, thank you so much. That was a great pitch. Could you just remind me again, or just walk me through once more, what's the compelling driver for the doctors, the GPs, to come off of the free tier and onto the paid subscription? I saw that there's already conversion happening, but your aspiration for the next kind of wave for that conversion is good because it's aggressive. But how does that actually work? Where's the stake? What's the story? How do they go to that next level?
Sure. So how this happens is basically they start with the free tier where they have the engagement with pharma companies. Right. They have the engagement with other doctors where they can look at cases together. But then if they want to become more productive, they want to look up medical records where they usually when they use paper records, they lose a lot of time looking up old records, finding them. Yeah. So this is one area where they say, okay, we save a lot of time. When they want to do drug inventories and they want to save time there as well. So this is really the compelling area where they say, okay, we save a lot of time. And then basically we are not only saving time for them and making them more productive, we also find new revenue streams for them. So for example, if they're ready to share anonymized healthcare records, basically we pay them. So basically we work together with pharma companies and we share research data if doctors are willing to share their data.
Excellent. No, that makes a ton of sense. Thank you for that. Just one more little quick question. Is there an opportunity here potentially to have some subsidy provided by the government for these types of businesses that want to come on board this type of platform? Meaning, is there a potential for you to become standardized as a platform from a mandate point of view?
Governments, I think this is really country by country.
Yep.
Here in Myanmar, it's now politically very difficult to do anything.
Agreed.
But in other markets, I think I could imagine. But the other partners that we could work together are like NGOs, because NGOs are often doing a big share of basically public health in yes. many developing countries, here in Myanmar as well. So basically, if we partner with NGOs and they say, okay, we would like to subsidize and help doctors to become more efficient and also receive healthcare data, basically this will also help really the public health purpose. So I think governments can be one way, but also NGOs.
Brilliant.
That's great. Brandon,
Yeah.
you have a question?
Hey, thanks for the presentation. It's very exciting. Could you, I'm not familiar with this space, but could you talk about the regulatory landscape for EHR practice management and some of the solutions you're offering in Myanmar and the rest of Southeast Asia, and whether there's any barriers you have to overcome there?
Sure. I think the regulatory environment, let's say it's country by country. So we have to look country by country. That's why we cannot just scale and say, okay, we offer the services everywhere. So we go country by country. But the regulatory environment is a bit less sensitive than when we are patient facing. So if we have a patient facing app or platform, then it's more sensitive. But this is purely basically facing doctors and pharma companies. So of course we have responsibilities in terms of security of healthcare records and so on. But in Myanmar, for example, we don't have any regulatory barriers to operate.
Hi, thanks for sharing about your company. It's a related question on market. So you size a market based on, I think, developing markets in the region. So digital health sector has been kind of heating up, especially last year. So there have been a number of players in the space. So can you maybe speak about how are you thinking about effectively expanding and in that regard?
Sure. So we have seen a lot of basically investments and interest more on the consumer facing side and on the telehealth side. So with COVID-19, a lot has been going into the telehealth side. And of course, there have been startups as well who have been operating in this area as well. I think what makes us a bit special is our approach of not only being in the productivity space, but also in the community building side. So we don't want to be just another electronic medical record system, but we want to be more really electronic medical records productivity, but really also working together in a collaborative way. So we don't want to let the doctors, the frontline doctors, be alone on their own, but really work together and be part of a community. So this is basically where you see the axis between productivity and ecosystem.
Thank you.
Great. I think that's all the time we have for questions from the judges. Sorry about that, Hu-Jun.
No problem.
Let's save it for the next one. Thank you for your time, Dr. Tora.
Thank you. Thanks for the opportunity.
No worries. Moving on to startup number 4, we have Arjun Chopra of Octolife. They are based in Singapore and they are a cloud-based employee wellness and benefits administration for enterprises. Welcome, Arjun.
Thanks, Ting.
No worries. When you're ready, do you want to share your screen?
Excellent. Thanks a lot for having me here. So my name is Arjun Chopra. I'm the founder of Octolife. Octolife is a white label SaaS platform which enables employers to provide personalized and holistic group benefits, which is insurance, health, wellness, and lifestyle. The reason why we started this is because we all have experienced group insurances and group benefits. Typically, these group insurances are given to us based on our job level, right? The reason why companies give these benefits to their employees are essentially because of 2 reasons. One, they want to attract, engage, and retain talent. The second is to have a healthy workforce and therefore they can be more productive. However, when you look at the employee side of consumption, these group benefits typically don't work because this is one size fits all. And now with a diverse work population, the problem becomes even more. The other piece is most of these insurance-led benefits are reactive benefits. They only come in when an employee becomes sick, whereas the employee needs holistic health and wellness benefits. When we look at this market, it's pretty massive. The qualified 17 plus million MSMEs in Southeast Asia and India, they are spending approximately $5.5 billion when it comes to group insurance as well as flex. And the timing is right now because of the COVID and the new normal, when you have remote workforce, a lot more focus on holistic health and well-being. plus a rapid digitalization within the SMEs because of COVID is the right opportunity. And this is being felt in the market, and there is a lot of movement within the insurers, brokers, as well as there are a lot of insurtech platforms which are coming up as well. But still, a large amount of that innovation and disruption is within the consumer and retail domain. And that's what got us excited about Octolife. So Octolife is a white labeled platform which enables insurers and banks to offer personalized and holistic group benefits to their corporates and SME clients. Now, how we do this is we enable an employer to put the benefit money into the employee's wallet. So if the company is spending $3,000 on my group insurance plus giving me another $1,000 of flex, the company can now put $4,000 into my wallet, and I can go into the system. I can select what group insurance or what particular product is relevant for me, what is the level of cover which is relevant for me, and whatever is the residual balance in my wallet, I can use that money in the comprehensive ecosystem which we offer, wherein I can have an access to a teledoc. I can use that money for preemptive health checkups. I can even buy Nike shoes or a Spotify connection because listening to music is wellness to me. Now, what we are doing through our platform is we're creating a single destination where all the needs of health, engagement, and company benefits is met for the employee. So within the single app, the employee can access insurance, submit claims, access to teledoc, access to the marketplace. We've also incorporated some business workflows. So if a manager wants to give his employee rewards, they can actually put money into the wallet and do a communication to the entire user base through this particular platform. Employees can also submit business claims in the SME space through this particular platform and get money into the wallet. Now, what we're trying to do through this particular platform, we're trying to, our platform is a plug and play depending on what the partners' need are. They can pick up specific modules, and these modules can be integrated into their existing workflows as well. And what we're trying to deliver is a platform which creates a compelling offering for our partners, delivering more value to its users while generating a lot of revenue for the company. And because it's a SaaS platform, we have multiple revenue sources. We have a license fees, we have a user license fees, plus anything which is transacted on our marketplace, we make a commission out of it as well. And lastly, in terms of the team, so I'm the founder. I've worked with large corporates. I've created products. I've scaled products into multiple markets as well. And Mani, my co-founder, he's the CTO. He brings in a lot of tech expertise to the table. He's worked in deep tech within Amazon and AWS, where he's worked on data security as well as the referral model. Plus, we are backed by a lot of industry leaders from within the insurance and health space. And our objective is to enable businesses to create healthy workforce.
Thank you very much, Arjun, for that presentation.
Thanks.
Now let's move on to our Q&A from the judges. Suchuen, do you have any questions for Arjun?
Yeah, Arjun, thanks for the presentation. Actually, I would just like to understand, right? Maybe I missed it in your earlier part of the presentation, but could you just kind of share with us exactly on your platform, are you providing a platform to join the players, or you actually have a group of partners that you have already partnered with for the respective market? And if yes, then who are these? I mean, how do you identify key partners, right? Especially many corporates actually have, appointed insurers, etc. So I just want to understand what is that key differentiation that you think you can bring to the table to kind of shift that market dynamics of the current, how is currently structured?
Sure. So from a marketplace, so firstly, we are a white label solution. So we will not go and sell our platform directly to a corporate. We will partner with an insurer or a bank like yourselves and deploy the platform for you, right? So wherein you can now take this solution to your corporate with a much more stronger offering. So typically in our ecosystem, we have health partners wherein we will have typically a teledoc partner as well as some lab or diagnostic chain. The insurance is provided by the partner, whether we are partnering with an insurer or a bank. We do have a lot of wellness partners on the platform, which we source and manage, and we bring them onto the platform. Plus, we have specific lifestyle service providers as well, and that constitutes the entire platform. Because it's white labeled, we customize the entire platform. So, for example, in a UOB scenario, right? So, a UOB partners with Prudential and Aviva from an insurance perspective. So if UOB is using this particular platform, then we will basically connect Prudential and Aviva insurance and power UOB to now reach out to their SME customers with not only group insurance, but this entire health and wellness ecosystem as well. Does that answer your question?
Yes, so you are more of you're more of a tech provider. Would you specify that as? Okay.
Correct.
Okay, thank you. Yeah, thanks for the clarification.
Thank you very much. Any other questions from judges?
I don't want to be the ball hog, but I'm going to ask my question.
Go ahead.
Arjun, thank you. Indeed, a great concept. I'm curious around what your thoughts are with respect to some of the disruptive players who are dominant in some of the other markets moving into the space, like Rippling and Benefit Focus and Bamboo HR and Gusto, Zenefits, et cetera, who are making great headway in other markets but aren't present out here. Do you see them potentially coming in to kind of steal your sandwich, or are you feeling pretty confident?
I like the way you've kind of articulated it with the sandwich example. But so the way there is, like I mentioned before, there is a lot of innovation which is happening in the last mile piece, right? In a direct B2C kind of a platform. So when you look at Zenefits, when you look at Gusto, most of these platforms do end-to-end themselves, right? So they're typically a broker. They're like a digital broker with a digital end fulfillment kind of a channel. Now it's a great model in itself, right? However, our thinking with Octolife was a little different. We wanted a platform which is extremely scalable, right? And when you are in a broker-led model, every new market you go into, you need to have an insurance license, which is extremely time consuming and painful and expensive as well. Now, what we chose as a business model was that we want to be the technology player, and we can empower, or we can provide our services to existing partners which are already operating within multiple markets. So that gives us the scalability without going through a license or a regulatory as we get into other markets. So those two business models are slightly different. The other piece is that for us, we strongly believe in collaboration. So therefore, when it is an insurer which already has an access to hundreds and thousands of businesses, the route which we are taking is that deploying our technology with the partner and enabling the partner with a superior product which helps them to acquire more customers, engage more customers, and monetize them more. So that's our kind of a strategy.
Thank you.
Thank you very much, Arjun. I wish you all the best. Okay, let's move on to our next startup. So startup number 5, we have Mike Han of Reverse Ads. They're based in Thailand, and Reverse Ads is a startup that is evolving keyword advertising through the use of big data, AI, and predictive modeling. Welcome, Mike.
Hi, thank you.
Hi. All right, so, okay, great. And look, your time starts now.
Okay, great, thank you. As you mentioned, we're reverseads.com. We were built solely to compete, as crazy as it sounds, directly against Google. So we compete on a keyword by keyword basis directly against Google. We are not a Google partner. We're not a Google reseller. We have to clarify this many times for our clients. We were built solely to create an alternative to Google search advertising. So we'll walk through now how we do that. So kind of at our core is, when you look at the vision or mission of our company, we want to return the internet back to its original roots. The internet was originally designed to connect computers. Cloud computing got in the way of all that, and all of the data of the internet goes to the giant tech giant clouds. By cutting into their advertising monopoly, you're able to start to return the internet to the people. We do this through a keyword assignment algorithm, which I'll get into. We do this through what we call open web advertising. So instead of advertising on the closed walled gardens of Google and Facebook, we advertise throughout the rest of the internet. And then also we're protecting everyone's privacy through blockchain, which I'll get into. We've raised up 4 million Singapore dollars to date. And as you'll see later, we've gained a ton of traction. So we are looking to a serious raise in late this year or in 2022. So the problem that we're trying to solve, 70% of advertising budgets in the world are being spent with Google and Facebook, but only 34% of people's time. It just simply isn't logical. People spend about 1/3 of their time on Google and Facebook, but advertisers spend 70% of their budgets. So that when you look at that, they're just logically amiss there. And why are the media buyers and advertisers of the world spending double on Google and Facebook versus the open web? And then how we want to solve this problem is, instead of using Google's model of a one search, one click type opportunity, or in a volatile cost kind of bidding based CPC, we've created a fixed CPC at half the cost of Google that follows that exact same user as soon as they leave Google or Facebook's walled garden. And we achieve this through our keyword assignment algorithm. We have a real quick product demo that I'll play for you now.
Reverse Ads is the first true alternative to Google search advertising made for the open web. The Reverse Ads web app is an all-in-one advertising tool designed to help you launch the perfect open web ad campaign. From keyword and competitive research to targeting your ideal customer and launching a campaign, Reverse Ads is with you every step of the way. Find the most effective keywords, get insights on pricing, traffic, and bidding difficulty, then save those keywords to a list. Expand your keyword targeting to build more effective campaigns and identify more relevant audiences. Search your competitors' URL for insights into their advertising practices and to improve the quality and competitiveness of your campaigns. Make use of your research by seamlessly importing your keyword list to set up your audience targeting in minutes. Upload your creative assets or build visually enticing ads with our drag and drop ad builder. Set your monthly budget, launch your campaign, and begin seeing immediate results with Reverse Ads.
Oh, sorry, I need to go back one now, sorry. Okay, and then real quickly, I'll cover, guys, where we focus is considered purchase industries. So if you need something right now, if you're locked out of your house, or you want to get the same pizza you get all the time, then Google's search bidding is very important and works great. Where we outperform them consistently is considered purchase industries like auto, real estate, legal, and anything B2B. And we built this from the very beginning with cookieless tracking and then blockchain technology to protect everyone's data to where only the client, our end client, is able to share in the user's data. In terms of success to date, we started with 14 employees. Now we're up to over 100 employees. Last year, we did 5.3 million in annual revenue. And we're forecasting this year 53 million in annual revenue that we're on track to do. and we've onboarded over 40 partners within the last 6 months. And over on the right, you'll see an example of we have over 120 active customers. We just launched our self-service app, so we focus primarily on strategic customers. And then finally, I just want to talk a little bit about our team. We have over 100 people from 27 countries, as I mentioned, and we're focusing on hiring talent from all over the world. And there's 3 different models that we go to sales with that I'll mention real briefly. We do direct sales, channel sales, and automated sales. Our most successful by far is channel sales. There are 350,000 Google and Facebook trusted ad partners throughout the world. Our goal is to move 2% of those partnerships to reverse ads. About 70% of our revenue today has came directly from Google and Facebook partners. We feel that's a big weakness in Google and Facebook's monopoly, so to speak, is that the relationships are controlled by the partners. We also are going to focus as we grow our funding on direct sales. We're looking at the top 25 cities throughout the world with the highest search advertising spend, again, with the goal of getting 2% of that market. And then finally, with the launch
Mike, I'm just going to cut you off right there. Sorry to be so ruthless, but I hope some of the questions from the judges can help you summarize that final point of yours.
Sure.
And yeah, very interesting deck with the first video that we saw. Any questions? Puyen, do you want to take the lead?
Sure, I'll chime in. So thanks for the presentation. Could you very briefly describe to us the onboarding process from your client's perspective?
Sure. So 2 different types of onboarding. For our automated self-service web application, there's obviously no human involvement, and it's done very similar to Google ads or Facebook ads. If our clients reach over $3,000 US per month spend, then they're assigned a full-time account manager. And then that account manager is working on the creative with them, working on deciding the keywords. And it's usually about a 24 to 48 hour process to onboard the client if they already have creative. If not, then we help them build creative, or they use our self-service automated tool to build their own creative.
Thank you.
Great, thank you. Any other questions, judges?
Hey, Mike, thanks for that. Oh, Charlie, sorry, stealing your thunder. Just 2 questions. So one, since we're on this slide, when you say Singapore, Bangkok, and Texas, are those your key markets, or just those your key hiring locations? And slightly unrelated question, could you elaborate a bit more about why you're focusing on considered purchase decisions?
Yeah, great question. So we didn't get into it today because of time constraints, but we're actually moving our headquarters to Singapore, and we're working with 4 different members from the EDB team. We are what's called BOI, or Board of Investment, approved in Thailand, which has given us a lot of advantages to be able to grow fast in Thailand. So we were able to be connected to the EDB in Singapore, and we're working on similar incentives to be able to actually move our headquarters there. We've kind of outgrown Thailand and its capabilities. So Singapore, Bangkok, and Texas are our most 3 important strategic cities. Singapore is where we're looking to move our headquarters. And then in terms of, sorry, Brandon, real quick, your second part of your question, the considered purchase, correct?
Yep. Yes.
Okay. Yeah, considered purchase is because of the fact that it gives us so many more opportunities in front of that matchback ID or device ID, in front of that person while they're considering a buy. So the search advertising is just that very first part of the funnel. Our algorithm assigns the highest probability keyword, and then with machine learning, test the accuracy of the assignment. And through doing that, the longer they are in a consideration process, the more opportunities we have for our algorithm to get smarter, and for our ads to get smarter, and to get more personalized for where they're actually at in the consideration process. So that's why in auto, real estate, B2B, that's why we do so well.
Great. I believe we have time for one more question. Charles, do you have a question?
You know what I do, but it's like a pontificating question. In the interest of time, I'll save it for the future.
Sounds good. Thanks, Charles.
Cool. There is a future. Okay, then any other judges would like to chime in?
Yeah, maybe I just have a very quick question, right? Actually, Mike, I would just like to understand it is the primary target segment of your solution. Do you which segment of customers do you actually foresee will be using this solution, right? Would it be the agencies that you're talking about, or is it the end customers that are looking to advertise?
Yes, very good question. We started off focusing direct to brand and going direct to customers, but we quickly realized that the Google and Facebook partner community of Google and Facebook certified partners have a boiling frustration with Google and Facebook. They're not able to share in revenue at all. They're not able to participate in any meaningful way in discussions with Google and Facebook. So now our revenues over the last year have shifted to indirect, and we focus not solely, but we focus primarily on Google and Facebook partners. So we data mine LinkedIn, identify these Google and Facebook certified partners, and then our sales team engages these agencies.
All right, great. Thank you, Mike.
Sure.
And yeah, thank you to all of our participants at home kind of chiming in on the chat. It's been popping off, and quite a lot of comments on how great your deck is, Mike.
Oh, thank you. Well, that's because of Sasitorn and the team. Sasitorn just moved from Singapore about a month ago.
Okay.
And everything.
That's great. Okay, you can stop sharing your screen now. Before we move on to our last startup, I want to do a quick shout out to everyone listening now. Our Tech in Asia annual flagship conference is back this October on the 12th and 13th of October. And in this edition, we look at Southeast Asia's global debut with headline-making SPACs, mergers, and investments. So learn from the leading founders and investors who will grace the stage, and they'll reveal how they're capturing the momentum of Southeast Asia's tech industry. So there'll be plenty of opportunities for you to pitch your startup to investors. So whatever that you learned here today, make sure to apply it then. And we will also make sure that there'll be time for business networking. So don't miss out on this. To our live or core subscribers that are listening, you can RSVP at no additional cost. And for everyone else, early bird tickets are now available at $29.90 USD, and instead of the usual $79 US. So definitely grab your tickets now. It's only on for a limited time. And yeah, that's the end of my short little announcement. Let's move on to our final startup. We have Daimler Villanelle, sorry if I pronounced that wrong, of Cocotel. They are based in the Philippines. Great. And they are a tech hotel brand and aggregator of hotels located at gateway destinations in the Philippines.
Hi, everyone. Nice to meet you. So do I start? Or?
Whenever you're ready, take it away. Good luck.
All right, thank you. Greetings, everyone. My name is Daimler, and I'm here today to introduce to you our company, Cocotel. We solve the problems of independent hotel owners by providing digital marketing, branding, and operational solutions. And we're currently raising $1 million in terms of safe, equity, or convertible notes. Due to the COVID-19 pandemic, the global market for business travel was dropped by 54% last year, 2020, and it is expected to drop by 4.5% this year. And the Philippines alone is not spared. And this is why we empower independent hotel owners by providing our solutions to solve their problems. Independent hotels and resorts have limited resources and expertise to survive the COVID-19 pandemic. And this is where first we solve the problem of technology. Without technology, hotels would have to resort to old and traditional and more importantly, inefficient processes, which is not efficient in this day and age. Second, without the digital marketing, without the right team and expertise, they lack the expertise and the campaign management to properly sell their rooms. And lastly, when it comes to customer service, due to the constraints of the hotel owners, they can't always be on the phone 24/7, right? And when you can't respond at the convenient time for customer, you lose the interest and they book somewhere else, losing the opportunity and most importantly, losing business at that point. And that's where we come in and we actually solve the problems by providing our solutions. First, we solve the problem of technology. We provide our property management system, which promotes efficiency, convenience, and most importantly, innovation. And second, we help them increase their online presence by providing our sales and digital marketing services and as well as our branding. And lastly, in terms of helping them maximize their profitability, we provide our yield, inventory, and revenue management, and as well as OTA management services, whereas we can help them by providing 24/7 Cocotel customer service. With this, we're able to maximize every opportunity given, and most importantly, profitability. As I mentioned, we provide our property management system for all of our partners. This saves hotel owners $3,000 to $5,000 per year, accessible even with the most minimal amount of internet, and can generate all types of reports in terms of occupancy, revenue, and more. Hotel owners can also uplift the standard of their hotel rooms by purchasing Cocotel-made products in order to upgrade the quality of their facilities as well. And currently, we're the biggest virtual hotel chain in the Philippines with more than 20 locations, 35 partner hotels, but we decided to think bigger and expand to our first international location in Australia. Why Australia? It's because we want to have the first mover advantage and because there's a vast inventory and opportunity in terms of helping more independent hotel owners in the country. Our business model has actually been proven by us and our competitors. However, the things that differentiate our competitors and us is that they focus on the urbanized areas and us, we focus on the getaway areas. So we've tapped into two markets, which is the Philippine and Australian hotel market, which is a combined value of $860 million US, and as well as we're currently the only profitable virtual hotel chain in the market right now, even during the COVID-19 pandemic. And we earn money through two different business models, which is Cocotel Culture, where we handle the sales and digital marketing management, charging 15% per booking. Second, when the hotel owner wants us to handle all of the properties operations, we do property management in exchange for 18% of the total monthly gross revenue generated by the entire property. And as I mentioned, even during the COVID-19 pandemic, we're a cash flow positive company. When we reopened back in November 2020, we saw an 8 times growth on our first month alone. And we entered 2021 as a cash flow positive company and still is, with a 54% month-on-month growth in terms of our hotel booking revenue. So this wouldn't be possible without the help of our team, from our founder whose background in hospitality, finance, business development, and most importantly, technology, with a combined experience of 70 years. We wouldn't be able to attend all of these awards and competitions that we've won in the previous years that we've been operating. And currently, we're raising $1 million in terms of equity, safe, or convertible notes, which will be allocated to Philippines and Australia for business development, sales and marketing, operations, and technology, where we want to reach our milestone Series A by 2023 and earn $1.5 million in terms of booking revenue, with more than 200,000 Cocotel nights spent and more than 125 hotel partners with Cocotel. These are our current partner hotels, whereas some of our current partner hotels who are currently thriving despite uncertainties brought about by the COVID-19 pandemic. And with the investment, we can help more hotel owners just like them in order for them to survive during these hard times. And they can escape the ordinary together with Cocotel. Thank you.
Thank you so much for that presentation. I also want to give a special shout out to your background and giving us all a little bit of hope of what traveling feels like. Okay, for the Q&A, we have your teammate, Raphael, who is joining us here. Hi, Raphael.
Hi, how are you?
Great. And judges, do you have questions? Please direct them at Raphael.
Yeah, just quickly, Raphael and Deborah, thank you for the presentation. What was the deciding factor that made you focus in on Australia for your first overseas expansion market?
All right, thanks very much for that question. The reason why we chose Australia, because we see the opportunity way better than in Southeast Asia. The reason is the economy or the travel industry in Australia already start reopening their business. So people can already do the domestic travel. Unlike in the Philippines, they're still on lockdown. And we can see there is a lot of opportunity there. Well, there is actually $500 million in terms of untapped beach hotel that we can actually penetrate. And at the same time, the good thing with Australia is there will be no competitor will be coming in yet because the market is actually quite small for them. While us, since we only do handpick some of our partners because we want to do personalized marketing for our partner, this is actually a great opportunity for us. And we do predict that by in the next 2023, we will be the biggest hotel chain in Australia.
Thank you. That's great.
Sure.
Wow. Okay, any other questions? Puyen, please go ahead.
Yeah, hi. Thank you for the pitch. I think the past 2 years must have not been easy. So well done for staying afloat. Actually, my question is related to that. You say that you are cash flow positive and profitable. Can you share some of the key levers that you have pulled, as a company to get to that level? What were the main strategies that have worked out well for you, and what did not? Thank you.
All right. No problem. So the reason why we are actually cash flow positive for this year is because we were able to do some study in terms of restructuring of our company. We do some outsource some of our businesses to save some costs, and at the same time, since actually when we try to transfer or expand our business in Australia, even though we only have few properties in Australia, but they are actually our market drive because we can see the demand is actually very high there, and we were actually be able to be positive. I mean, like our sales booking grow exponentially because of the Australian domestic market. But it doesn't mean that we are not stopping also in the Philippines, because we can see that even in the Philippines, the economy started to recover in terms of the tourism industry. So we can see also another opportunity for us of the Philippines as well. But yeah, we are actually very confident with our operations right now because we were able to save or somehow restructuring the company to make it profitable.
Great, thank you for that. Any other questions?
Yeah, I mean, hey, thanks for the sharing of your business model. Actually, I just have a very quick question, right? It's interesting that you're targeting, I mean, from your pain point slide, I can see that you're targeting the segment that's a little bit less digitally savvy, the hotel chain. They are really looking to kind of look for new channels to do marketing. So I just would like to understand, right? Because of that segment that you're after and you're a tech platform, what is your acquisition strategy and how is the onboarding process typically like?
Okay, so during the pandemic, actually before the pandemic, we do aggressive marketing strategy in order for us to acquire more hotels, but it is actually not proven successful. And then pandemic came, and then this is what happened right now. Even though we are in the difficult situation, we will still be able to expand with zero marketing. Which means what we do is we do only cold callings and even cold emails. But thank God, actually, we were able to expand. Actually, we just onboarded during the pandemic itself around 15 new more properties with zero marketing expenses, because the moment that they were able to understand our advocacy, they usually partner with us. But currently, what we're doing is we are not giving up in terms of like callings every single hotels that we know that is actually in the market, even though we don't have any connection, but we do very, very, very aggressive, but with a cost minimum marketing strategy, which is cold callings and cold emails.
And sorry, and on the onboarding process, how do the hotel actually get onto your platform? Do you register on their behalf or they actually have to do it on their own?
Okay, so actually in regards to the onboarding, it's going to be very easy. Usually our team will be the one to go there, and we will be the one to ask them in terms of like the hotel data information that we need, and they just need to simply fill that up, and then we'll take the pictures of the hotel itself, and then we will market it online. So the reason why in terms of the onboarding process, it is usually we only take more or less 2 weeks in order for them to be onboarded in our platform, and not only in our platform, but it's also in other online travel agency platforms such as Agoda and Booking.com. So that is the reason why we said that we will be the one to help them market, not only using our capacity, but also other platforms' capacity as well. And that is the reason why they want to onboard with us without any hassle of doing that by themselves.
Okay, thank you.
Sure, no problem.
Thank you so much, Rafael, and thank you to Damir. All right, I think that is all of our pitches for today. And I would like to invite all the judges to go and deliberate. You guys have about, what, 10, 15 minutes to talk about all the pitches that you saw. And yeah, we'll hear from you later. So meanwhile, I would like to welcome to the stage Nikita, writer at Tech in Asia, as well as Putra, our Indonesia correspondent. Hi, guys.
Hi.
Hi.
Hey,
good to see you guys. I know we're all from Tech in Asia, but this is the first time that we're meeting.
Yeah.
Crazy times, yes.
It is. I hope that, we can visit each other, vice versa.
Yeah, the conference. I have my eye on the conference.
One day.
Yeah.
One day.
Yeah, we'll see.
Vibes. Let's keep it happy. So you guys have been watching all the pitches?
Yeah.
Yeah. Thank you for spending your evening with us. So yeah, let's get to it. Which of these, out of all of these startups, which one was the most interesting product for you? Nikita, do you want to go first?
Actually, I found that there were some specifics about each of the startups that sort of highlighted and sort of had their pitfalls also, so I think it's going to be a little hard call to sort of decide, but just to sort of go in the reverse order, I think Cocotel's approach of sort of being, boots on the ground approach, that will take them a really long, irrespective of how this event goes, it's going to take them a long way because they're sort of very clear about what they want to do, and they're completely, boots on the ground about it. I think that's really going to help them. And I liked what Octolife had to offer. It's a really big market that they're looking at, the health tech solutions they're offering and tying up with everybody. And they're also very conscious about how they want to scale up. I think that also is sort of a very big game changer if they're clear about how to go about, something like that.
Yeah, personally, as an employee, I would love to mix
Absolutely.
and match my incentives, because like what he said, wellness, music is wellness for him, but it might not be for anyone else, because we all have such different tastes.
Right. And the fact that they have an easy entry into some of the markets, I think that also gives them a leg up, because they don't really have to tie themselves up with regulatory hurdles or look for licenses or something. That itself, I think, sort of eases the process a lot. Putra, what do you think?
Yeah, I agree with Nikita for sure in that there's something to like from every single one of the startups.
Yeah.
I think what stood out to me was probably Ziwaka. I think I found it probably really interesting just because, Myanmar, it seems like there's a big opportunity there for telemedicine.
Yeah.
I like that it's sort of like kind of like a grassroots approach, because you kind of start with doctors.
Yeah.
If you compare to Indonesia, for example, I think there's a lot of players, right? Like in the healthcare space, whether it's the government or insurance companies, and even just like private hospitals, right? And like they're very powerful. So we do have a couple of telemedicine startups, but there maybe isn't as much flexibility compared to what a company like Ziwaka can get in Myanmar, which is still kind of like a nascent space, right?
Right. I also think Ziwaka's origin story is kind of cool. I think that's the way the presentation went, and I think that was sort of appealing also to the audience and the guests. It would be because you see the people behind it who sort of making it happen, and I think that is also sort of a story that people like to sort of share as the companies grow, because you want to identify with the founders, you want to identify with the work, with the companies that you're working with, or you're signing up with. I think that sort of also goes a really long way. Yeah, so I think that works for Ziwaka.
Yeah, like it's a very clear like problem statement, I guess. Yeah.
Yeah, even for in fact for Tuju Media, I mean, I don't know. When I first read about the startup, when I first heard about the startup, I was like, translation, dubbing. It's kind of tricky. It's a tricky space because a bad dubbing means you're gonna hate the movie or hate the show. You're just gonna never sign up for that same OTT platform again because they keep giving you these crappy translations, and because translations are really tricky. But then there's this different aspect to it, the whole piracy aspect that I hadn't quite considered or thought about seriously before. And sort of if you can sort of bridge the gap between giving me a good translation and making sure that people who deserve credit for something get that, I mean, I would totally vote for that. So
yeah, absolutely right. I think the amount of times that I've closed an anime or a Korean soap opera, like just because of the horrible dubbing or the translations.
Right.
Mm-hmm. And they're also a crowd favorite. They're up on the polls.
Oh, okay. Yeah, I mean, they said they offer 23 languages. I don't know. I mean, that's like, is it one word for every language?
It's a very regional audience we have today.
Yeah. But it is a tricky business though. I mean, to sort of stick to the soul of the translation and to sort of make sure that you don't lose out on the cultural nitty-gritties that you really want to put forward.
Mm-hmm.
Right, like kind of like the nuances, right? Like
Yeah.
I feel like Google Translate has gone a long way, but I feel like sometimes I still use that as well. I still use Google Translate whenever I need to translate articles, and it works pretty well so far. But you kind of still need like a human being to kind of go through the entire piece and just kind of correct things here and there, right? Like the use of words and things like that. It's not yet. It's not something AI can replace just yet. Maybe.
Yeah. I think it sort of swings between these two worlds where you are okay with it and you bang your head on the wall. Mm-hmm. There's really no middle ground when it comes to sort of dubbing and translations. So, but I also kind of think that, the other startup that we heard from, Kinesis, I'm not sure I pronounced it.
It's Kinesis.
Yes. So, they have a very targeted market. And that sort of can work for them very well. I could be a potential customer giving my lifestyle, a few years down the line, I'll be sort of signing up for their knee replacement. But yeah, I think it's a very targeted market that they're looking at. And that I think holds a very good future. It's a very promising future for startups like that, because we have overall general health startups, but very few of them sort of target specific things.
And it's targeted, but also in the same way, I've heard so many people of many ages to just say, my knees.
Yeah, knees and back. I think it's like that we all talk about. Like,
exactly.
Bad knees and bad backs.
I really like that they also have like a hardware component. I think that kind of makes it hard for competitors to kind of come in and get what's theirs.
Yeah.
Right, and it kind of makes it easier as well, maybe to charge customers, right? Just because it's not easily replaceable.
Yeah. And what do you guys think about reverse ads?
Well, they are currently topping the chart by quite a bit on the poll.
Very interesting.
Maybe it's the video and
I think it's the video.
No voice, that Will Arnett voiceover kind of got everybody's attention.
I think it's the whole dynamic of, what, we're going to beat Google at their game. And who does not want to do that? I mean, you always want to sort of cheer for the guy who goes up against Goliath, against Dave. You want to cheer for David.
Yeah.
And I think we're also very uneasy about Google and Facebook, right? These days, with when it comes to personal data, Big Brother, and all that stuff, it's and there's also, like, if you're a brand as well, if you're spending a lot of money on Google and Facebook ads, it's also very opaque, right? Like, you don't actually know whether or not all the money that you're spending is getting you the real returns, or if it's just you just gotta throw money at something and
you don't necessarily get the return you actually need. But then there isn't a real alternative, right? At this point, like it's really just them,
Right. Right.
It was
I
a
feel
very
like,
strong opening from them to be like,
yeah,
hey, we're anti-Google. We're here to like beat the giant. And I
yeah,
feel like every one of us, like people are ready now to go against them.
yeah.
Yeah, definitely.
I think it's really great on the ethics side, when we talk about that. But I don't know. Like before hearing their pitch, I had serious doubts about their scalability, and I was like, I have no idea how they're gonna do this. But now I feel like maybe they can. I don't know. Maybe it was just the video.
And I think they are targeting. I think the Series A is like what 66 million. I think that's their goal.
Yeah.
So I guess that's the kind of money that you're gonna need to pull off something like that, maybe.
Yeah. I mean, a statement like they've outgrown Thailand, and that's why they're moving to Singapore. I mean, that's a sort of very strong statement. So I'm like, yeah, okay.
We see you.
Yeah. We see you.
Yeah. Well, we've kind of, talked about all the different startups, and this is a pitching competition. Let's
Right.
talk about, I don't know, the X factor. What, how do you grade them?
So, okay. So the thing is, we have quite a few solutions in the healthcare space. I think today's lineup is sort of dominating what, three startups.
Mhm.
So 1, 2, 3, yeah. And I know I think it's kind of hard to choose.
Yeah.
It's hard to choose because personally, I'm worried about Cocotel because of the pandemic, and they say they're growing. They say they've done well, but I don't know. I mean, how secure is the future of travel really?
Yeah, it is definitely.
Yeah, we're looking at a long-term thing. We're not looking at immediate growth,
Mhm.
even if they're expanding to Australia or whatever. So I don't.
I think it's cool. It's really cool that they've managed to become, profitable during a pandemic. But also, it's a space that has so many competitors, so many big players. I mean, like the likes of Oyo, Red Doors,
right,
and even like Airbnb, and even just like regular hotel companies, right? Like there's, it would be very easy for them to just kind of do something similar. The barriers of entry are not very high, but I guess it's all about execution.
It is.
There's a lot of startups.
The competition is going to be really bad once they sort of really step outside. So so I wouldn't place my bets there because of the competition. Yeah. And I don't know, where would I?
Okay, thank you so much, Nikita and Pooja, and also a job well done to all of our startups here today. You guys have done a wonderful job at pitching, and I know virtual pitching might not, be an ideal situation for everyone, but I think everyone has done wonderfully. And I just got a note that our judges have made the final call. So once again, thank you, Nikita, Pooja, and I would like to welcome the judges back on the screen. Welcome, welcome. So now time for the big reveal. Is everyone here?
I think we're all around.
We're all around somewhere. Okay.
All around. We're here in the virtual world. We're all here.
Everyone, drum roll, please. The runner-up for Tech in Asia virtual pitch night with Globalization Partners is Ziwaka.
Woo, Ziwaka.
Well done. Welcome.
Congratulations, guys.
Thanks so much.
Congratulations.
Super well done.
Yeah, we loved your presentation. Like what Nikita said, I think you guys presented the problem of what you guys are facing very well. And we love that the angle is that, has some community and grassroots aspects to it. Or this is what we talked about anyway. Charles, do you want to give a brief on Ziwaka?
Yeah, look, I think everyone agreed that the the model and the expertise behind the model and the logic of it is a phenomenal sort of foundation, but moreover, the mission and where you're aiming this business has scalability way beyond even just the Southeast Asia region, but it has applicability to a multitude of different emerging markets all around the world. And frankly, it's a very daunting task that you're trying to take on, but it's one that needs immediate focus. And with the proxy of expertise that you bring, plus community of non-government organizations that want to kind of adopt these types of models, you're basically an ancillary effect is that you're helping them to digitize as well and making them more efficient. So it's an amplification effect, and we're really excited about it. So congratulations to you guys.
Thank you so much.
Well done. Okay, now for the grand winner. Reverse ads.
Reverse ads.
Well done, Mike.
Reverse ads.
Congratulations.
Well done. Congratulations, Mike.
How does it feel?
Thank you very much, guys. We're all here everyone has been vaccinated, so we're all here in the office. So it's a loud office. So guys, thank you very much. I really
That is super cool.
Yeah.
Charles, a quick, why was Reverse Ads chosen as the winner?
Well, look, I mean, everybody loves a David and Goliath story. And I think it's just phenomenal that you guys have fronted up and started right from the bat saying, we ain't Google, we're out to kick their ass. So I just thought that was really impressive. I think that competition is a great thing. And I know that they will, they'll welcome the competition. And it's going to make the entire industry more equitable and more democratic for all kinds of different businesses. And to your point, getting back to the reason behind why the internet was formed in the first place, I think is a noble mission. So we're really excited to see you guys expand and take off. And we tip our cap to your tenacity.
Thank you very much. We really appreciate it, you guys. It's being recognized from Tech in Asia. We respect Tech in Asia so much. And so we sincerely appreciate the recognition. So thank you very much.
That's terrific. Congratulations, man. And congratulations to Ziwaka. And if I can, I just want to make a quick shout out also to the team at Cocatel. It was a tough decision around all of the folks who pitched this afternoon. You all did a phenomenal job. Cocatel, we just wanted to give you a quick shout out also because of your incredible strength and tenacity through the pandemic to do so well and to be on the trajectory that you're on. We give you guys props for all the hard work, and we look forward to seeing your success as you guys continue to grow as well.
Thank you for that. Thank you, Charles.
That's great. Okay, thank you so much, everyone, for tuning in. Thank you, judges, for your time and your efforts into looking through all of our pitches today. For those of you who has been kind of dropping in and out of this session, the recording of this pitch night will be posted on Tech in Asia, so look out for that. And yeah, we just want to thank everyone for tuning in and have a great evening.